Are you tired of worrying about your 2023 farm profits? Take control of your investments and maximize your returns. Let Advanced Trading help you create a marketing strategy to protect your investment and reduce market risk. For over 40 years, Advanced Trading's non-predictive approach has helped farmers secure and extend profits regardless of market volatility. Our team is positioned to help you make the most of 2023. You never stop working, and neither do we.
Well, good morning, everyone. My name's Tommy Grisafi. I am with Advanced Trading. Thank you for watching this ATI YouTube. I have a favor to ask before we jump into the numbers. Can you subscribe to the ATI YouTube channel? And of course, if you hit notifications, you will get more data like this. We're going to start pumping out a lot of content. I have two things to say real quick. One, if you're an ATI client, we thank you for your business. Two, if you're not, we'd love to get a chance to talk to you and help you manage risk here real quick. Before we have our, we switch over to Michael Reginelli and Brian Basting, a couple things to say. As a commodity broker, we're always asking you to leave scale up orders in. And I think when you see us digest these numbers and talk, that currently soybeans are almost 15, 20 cents off their highs, and corn's a solid 10 cents off its high. So when these USDA numbers come out and we have this high frequency trade spike, sometimes it's a good opportunity to sell. I will give you a disclaimer. I have backyarditis. It rains here. I'm in Valparaiso, Indiana. My coworkers are in Bloomington, Illinois. I have some serious backyarditis. Crops here look good. USDA is telling us what the numbers are. I'll hand this back over to Michael Reginelli, and we're going to dive in these numbers. And the first thing I'd like to ask is, Michael, what really stood out in this report when you, let's talk corn yield first.
Yeah, corn yield side, I wouldn't say any massive surprises. You know, I think the market had been gearing up for a modest reduction. Makes sense coming off. Crop conditions have stabilized a little bit since we really were downtrodden in June. We've seen some consistent rains, like you mentioned, specifically here just recently over the past 2 weeks. We got another third of an inch here in Bloomington today, so I think people are feeling pretty good, specifically about how that's going to impact the bean crop too, which I think Brian will talk about. But a little over a 2 bushel per acre cut in the yield today. It's just below what the average trade guess was, so it felt like we were pretty well positioned for it. Iowa corn yield at 203, Illinois at 201. Illinois was 214 last year. That was a record, but 201 is certainly more optimistic than I think anybody would have told you 6 weeks ago looking around Illinois. So in general, I wouldn't say there's any shock to the system from a yield standpoint. I feel like a lot of it was kind of baked into the market, and it's pretty similar with what we've been thinking internally at at a 175.1.
That's awesome. Brian, you want to tackle soybeans and see, I guess my question would be, what made us spike up? We traded as high as 1338 here in the Nove soybeans.
They did trim the yield here this month, Tommy, from 52 last month to 50.9 this month. That was a little bit below expectations. The trade was looking for 51.4, so about a half bushel below expectations. Like you said, maybe an initial knee-jerk reaction to that number. Looking at the carryout number was a bit below expectations for new crop 2 at 245 versus 263 trade. But I think Michael made a great point. We've got to be patient here with these bean yields because August is such a critical month. And I would extend that even into Labor Day this year, that first week of September, because we did plant a fair amount of double crop beans. So we're looking at the next really month, I think, Tommy, where that number still has some room to change. And I think that the USDA conducted their surveys last few days of July, first few days of August. As Michael said, we've had some good rains across some key areas since then.
Real quick question for you, Brian. I notice lately we've sold a lot of soybeans. Of course, we put out those exports. The USDA puts out those exports. Are we catching up, or is this normal? I know as we come into that gut slot of harvest, this is pretty typical for China to come in this time of year. Is that correct?
You hit the nail on the head, Tommy, because we are catching up, as it were. If you combine the unshipped sales of new crop beans, and we got about 2 weeks left here this whole crop year, 3 weeks, that number, I believe, is at an 18-year low. So basically, an end user has been very patient purchasing U.S. beans. They've been aggressively, needless to say, lifting beans out of Brazil. But I think that there is some catch-up purchasing taking place here. The market has broken here the last few weeks, and they are catching up. It just goes to underscore, though, Tommy, the intense competition I think we're looking at from Brazil, at least into the early stages of fall here. But we are seeing a bit of catch-up business being recorded here, and maybe even going into this report, some end users decide to catch up.
Brian, let's add to that. Let's add a little color. You mentioned the word Brazil. Let's talk Brazil and Argentina. I noticed who came out the other day? Someone came out and raised the estimate again to a new record yield. What's going on? They getting better at growing corn and beans in South America?
Yeah, it really is a stellar crop this year, Tommy, from Brazil, starting with the bean crop. 156 million tons is where the USDA has it as now. That's far and away a record, and I think we're seeing that in the volume of soybean exports pouring out of Brazil this summer. Tremendous volumes, and again, I think that has been negative U.S. demand here in terms of getting sales on the books, particularly for new crop, as you said. Switching over to the corn, they're harvesting that corn crop as we speak, Tommy. They're about 2/3 done with corn harvest in Brazil. That's the second crop, Safrinha harvest. It's another 2 million ton increase this month, Tommy, to a record 135 million tons in Brazil. They did not change the export forecast, but as this soybean export program winds down, Tommy, they'll start ramping up that corn export program this fall. And I mentioned the unshipped sales of beans earlier. The unshipped sales combined of corn are at the second lowest level, I believe, in like 14 or 15 years. So we are looking at some stiff competition, but Brazil has really stepped up their production the last few years, and they had favorable weather this year.
Well, real quick before we move on, the next question, but don't start talking just yet. We'll talk wheat, which whoever wants to grab that one, we can. But I'll give you a little update on markets. I have the markets live in front of me. Nove soybeans up 5, 13.24. Dees corn, $5. Not too exciting, but Dees corn, $5, up 3.5 cents. And, there were a lot of analysts who said that we could shoot right down to 480. So if we could maintain these levels, we might take it for a win. As we move into wheat, Board of Trade wheat creeping back towards the highs, only down 1. KC wheat down 3. Minneapolis wheat showing a little strength, up 5. 8.25 the price on your SEP. Minneapolis wheat. Farmers up North Dakota, I spoke to them this week. They are harvesting wheat. And of course, what happens, guys, when it's time to harvest wheat? It starts to rain. So are you praying for a rain? Or they want a rain for their soybeans to finish up, yet they want to harvest barley and wheat. So next question, please. Let's move to wheat. So much to talk about there. And they grow wheat in a lot of places. Who wants to grab this one?
Right. Go ahead, Brian.
Okay, I was just going to
hold that behind you.
I was just going to say, I know Michael can address particularly what's going on in terms of the cash markets and the spreads much better than me, Tommy, but I'll kind of set the table for him, as it were. USDA aggressively increased the soft red winter crop today, 440 million bushel, 91 bushel per yield in Ohio, Tommy, a stellar yield as the harvest is completed there. So the soft red crop is much bigger. We are not seeing yet the demand for soft red winter. So again, I'll defer to Michael in terms of what that's being said in terms of the spreads and so forth. Just at the other end of the spectrum, though, Tommy, they did cut the hard red spring production up in North Dakota substantially from what it was there in July, particularly in North Dakota, the state of North Dakota. So they dropped the yield, I believe, from 50 bushel down to 47 in North Dakota for that spring wheat crop. So kind of divergent trends there. They did increase, I believe, the HRW crop modestly from last month. But all in all, Tommy, some ample supplies of wheat, some variables to keep an eye on. Needless to say, the Black Sea situation, top of the list. But the wheat market is battling uphill here in terms of competition today from Russia, exporting still record volumes of wheat, and particularly SRW, ample supply here domestically.
Yeah, they reduced demand on hard red wheat more than they increased the production and the supply. So it's still it's a modest gain, but from a carryout standpoint, but just that production number alone doesn't really carry all the weight. But the soft red numbers are pretty interesting when you kind of dig into them. They did bump domestic usage by 9 million, but the production gain was more than that. So soft red wheat carryout continues to go up. Domestic coverage seems really solid right now. We're not really seeing any signs of increased demand from an export standpoint on soft red wheat. And if anything, actually, we're seeing some imports from Ontario begin to flow south. So we're almost going the other direction as far as needing to increase demand on the soft red side of the balance sheet as we contend with a really large crop.
So, Michael, that brings up an interesting point that farmers have asked me. Hey, there's this Ukraine war going on. We're 18 months into it.
Hmm.
The world needs wheat. When I look at SEP-D Board of Trade wheat, it's at minus 27. It was as wide as minus 28. When they're bear spreading wheat like that, that is not a sign that people are coming to America and buying our product. And then you mentioned that they're possibly importing some wheats. That might explain some of that price action in the wheat spreads.
Maybe a little bit. It gets strange by class because all wheat isn't exactly the same. Like if we have food shortages, sure, wheat is wheat. But right now we're really not at that point in time. Like the hard red balance sheet is a little harrowing here in the U.S. It's tight. The soft red balance sheet is the complete opposite. And the product that they're trying to backfill or displace coming out of the FSU, it's not a soft wheat issue just yet. So soft wheat economics are tough. We have more supply than demand in the U.S. The domestic coverage is good, and if there's not exports, that's a big reason that spread is pushing out. Soft red wheat likely isn't going to be the class that's going to backfill or backstop shortages for those global buyers that aren't buying out of the FSU.
Is a good answer. All right, let's keep the show rolling real quick. Ukraine's on my mind. It's been on my mind for over 500 and some days. It's on everyone's mind. What's this mean when you talk about that ports are closed, putting grain on a train, switching the actual train as it crosses the border as we go into a different scale of a railroad, moving that grain across another country. If you got your crystal ball out, when's the USDA really start to address what the Ukraine can realistically export?
I don't think they're there yet. I'll let Brian kind of backfill this, but I think there's still work to be done. I think our estimates are that corn exports in Ukraine could be down by as much as 375 to 400 million in the upcoming cycle. Wheat, I don't know. What do you think, Brian? 225 to 250, yeah. Probably off. So they're trying to reconcile with it, but it's a long-term issue. And then you also have surrounding countries that aren't buying Ukrainian product trying to hold up economics for their local farmers too, which really then handcuffs them if they can't access ports for water exports. So,
I just add on to Michael's nice summary there, Tommy, that another variable to keep in mind here is this 24 crop, particularly for wheat. They're going to be starting to try to seed, underline the phrase, try to seed the 24 wheat crop here in just a few months. So that'll be a variable, another one down the road to keep an eye on. It seems like things are deteriorating every day, but it's a very fluid situation. But I think that 24 crop, the first crop that will be affected, of course, will be the wheat crop that's seeded this fall. But that'll be a key one to watch as we move forward.
Well, thank you both. We're not done yet. We're going to do a speed round here, and we're going to talk about outside economics. Of course, the stock market's had a heck of a run. We had CPI this week. We had PPI this week, but something's changed. If Tommy, Michael, and Brian were sitting here 1 year ago doing a YouTube live, where were interest rates a year ago versus where they are now? So we know the stock market's had a heck of a recovery. But Michael, first to you, when you work with commercial elevators and you see interest rates, the cost of money go from 3% to these elevated levels, how does that affect how customers of yours do business?
It impacts everybody, in not just in the ag supply chain, but beyond it, obviously. But it changes economics, and there's a lot of other considerations that all of a sudden have to come up, particularly as we work into the fall. And you have to then think, okay, what are storage charges, what are service charges, how can we effectively defend what we're buying and holding? And it becomes a spread conversation as well, because the Board of Trade, if you're going to actually be able to store and hold, is going to have to allocate enough carry to justify holding on to those products and having that capital tied up for longer durations or longer periods of time. So it creates an environment where, depending on what the cash markets do, spreads might have to go wider than what I'd say we've traditionally become used to, if you look at it from a seasonal standpoint. So that's a key consideration is how to deploy capital and how to protect capital when you're looking at what seems like, especially in certain markets, a sizable crop that we're going to be buying in here this fall and beyond.
So from the farmer's perspective, people I deal with, of course, we work with people all over the United States. Just say you're an Iowa farmer. Say, Brian, this question goes to you. Say you're an Iowa farmer in Bettendorf, Iowa. What should someone do if they have an above average crop? They don't have enough room to store it. What's the play? Because we've had 15 years of low interest rates, and now we're popping out of that. Now, you and I, Brian, we have a little gray hair, and we're old enough to know better, and that's a compliment to you. You are by far one of the best, if not the best, in the business. But you've been around the block a long time. Tell me how this is maybe different. We're not going to take you all the way back to 1980, but tell us how this is different from the past.
Well, I have a lot more gray hair than you do, Tommy, and there's a good reason. As you said, I do go back to those days when we did have high interest rates. What scores at the top of the list for me, Tommy, is that for a producer to defend their balance sheet, because this has added another element in terms of a cost when you're looking at financing a crop, financing machinery, financing a land purchase, whatever the case may be. But it really, if we bring it back to marketing, Tommy, I think you really have to focus in on what you can control. You can't control interest rates as a producer. You know, the Fed is going to do what the Fed is going to do. What you can do is get control of your 2023 bushels. If you have any 22 left, of course, that'd be very top of the list. But 2023, the crop you're going to harvest here in a few weeks, get control of those bushels. Give yourself a floor. Leave yourself open on the upside. And Tommy, it's not too early to think about 24. I'd remind the viewers that we're not going to set those crop insurance prices for your 24 corn and beans until February, which is basically 7 full months away. So I think the element of increased costs associated with interest rates, Tommy, really underscores the producer to be proactive, working with a trusted risk management advisor to get that balance sheet in order, because things are changing as we speak. We've had some really strong years here financially the last few years in general, and we're looking forward to some changes now, though. So be proactive, work with someone you trust, defend your balance sheet, and again, I don't think it's too early to think about 24.
And Tommy, real quick, using corn as an example, right? Like if you look back, if you want a precursor, obviously there's different circumstances this year than say 2013, but that was a year where we were coming out of the drought, we were trying to rebuild stocks, carryouts were growing. That year, if you compare a 2013 chart to a D's 23 chart, fairly highly correlated. The big difference is money was basically free. Interest was super low in 2013. And so when you think about it from a merchandising standpoint or even a farmer standpoint, you got to know that, you know, the D's March corn spread that year was trading around 13 cents this time of year as we went into a rebuild, but money costs were minimal. We have significant money costs this year, which means those spreads can go quite a bit wider, and there's a basis implication there too, that basis could, if the spreads need to go wider because we have more supply on hand than we have demand and exports stay shallow, there's a scenario where those spreads could widen out, which would drive basis maybe a little weaker than people are accustomed to this fall. So that's something that you have to have your head up for.
I'd added one more comment,
yes,
Tommy,
sir.
on top of that would be, as a producer, you want to be a student of the market. And Michael made a couple really good points there to keep in mind as a producer. As a student of the market, if the market is paying you to store grain with a wide carry, for example, all the way out to May or July of next year, as you get into harvest this fall, there's an opportunity to take advantage of that, but you must put a floor out there. Just because that spread goes to a higher level doesn't mean that flat price is going to be there when we get there. We haven't talked about this for several years either, but the point being is that just because that deferred price is higher than the nearby price today, in fact, history tells us, Tommy, as I know you know, generally in a bearish market, that deferred contract will grind down to that nearby contract, and that carry will erode. So if that carry develops, as Michael articulated a moment ago, you got to lock that carry in. Give yourself some flexibility, but there are ways to do that going forward.
I see, looking at D's, and just to give a reminder to the farmer marketing folks, you know, at front month, D's 23 is trading $5 and D's 24 is trading $5.15, $5.20. Oftentimes, as this crop gets bigger, to Brian and Michael's point, they're selling the front month so hard that back month kind of, I don't want to say accidentally, but it goes up. And some of the best marketing plays I've ever seen as we start to accumulate bushels is that when things look horrible in the front month, people start thinking about that back month. And as far as I can tell you, folks, the only way I know how to catch the carry is to catch it. And that means a serious sale in HTA. Otherwise, throw that put under there. But to catch the carry, you got to catch it. Yep. All right, guys, I think we did well enough. We'll let people get back to their day. No one told me how to end this show, but I'll end it in just the way I can say is that it's a privilege to work with both of you. You're both some of the best in the business. Advanced Trading appreciates everyone's business. We'll be putting out more live content more often. Again, we appreciate you. We appreciate your time. And we're going to get back to work and start smiling and dialing. Till next time, my name's Tommy Grisafi, and I'm Bullish Agriculture.